Hi there, a very good morning to all our viewers who join us live on this broadcast here at Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. And let me give you a quick recap of where we left off things. Well, markets did wipe out all of those gains in early trade yesterday to close lower despite that good handover that we got, especially from our Asian peers. We saw the Nikkei also rebound significantly, but we didn't manage here back for the Indian indices, didn't manage to really hold up to those levels. Nifty 50 falling below that 24,000 mark and finishing at 23,993, which is down by about 63 odd points. But we have defended that 50-day exponential moving average, which is quite important to track at this point. That stands at 23,965. Now, if we do move below that, then we could see a further downtrend because overall the trend really seems to be quite weak at this point. So how is one supposed to be navigating through this market, and how should you be cherry picking your stocks into your portfolio? We'll get discussing all of that with our experts. But before that, let me take you through all the top headlines. Wall Street snaps a 3-day losing streak in a broad relief rally. We could say the Dow Jones closes nearly 300 points higher, while the S&P 500 and the Nasdaq gain over 1%, recovering from those losses of the previous session. The futures, though, this morning are trading lower. And stocks in the Asia-Pacific region are trading higher as investors await that key trade data from China today. The GIFT Nifty is implying a slightly higher start for the Indian equity market. And Brent crude prices have risen slightly above that $76 a barrel, recovering from the 7-month low that it saw due to the renewed focus on supply-side issues as well as a rebound in equities. And the government moves an amendment to provide relief for realty companies under the LTCG regime. With the finance minister's bill amendment, taxpayers can now choose between 12.5% without indexation or a 20% with indexation on their real estate assets. Well, that's where we left off trade. We have a good enough or a positive handover, we would say. But can that really sway things for the Nifty 50? And can we go past again that 24,000 levels or even higher from here is what everyone's eyes are going to be at. Like I mentioned, that 50-day EMA is what one is going to be tracking. And if we manage to go below that, then that downward trend continues. Whereas if we manage to actually move above with what the GIFT Nifty is implying at this point, we can see some further, uptick at least in trade for now. But let me also take you through a couple of F&O cues that we could be tracking at this point. Now, market has managed, we pretty much saw that all of those gains were erased towards the second half of trade yesterday, and that's what we're likely to see even happen today. That fizzle out or that momentum not really holding through. But if you look at, it was the financials really that saw the biggest drag in trade yesterday. Also, your real estate stocks will be a buzz today after the news that came out from the government late last evening. But overall, the market breadth remains in favor of the declines at this point, with the advanced decline ratio at 1:2 currently. So that is something we're going to be tracking. Of course, the PCR or the put call ratio for the Nifty 50, that one is right now at 0.71 versus the 0.72. So just a bit of change there. But of course, this does indicate that we are on that cusp, on that borderline of saying that there's more selling of calls that will happen rather than the puts, which could be a little difficult situation for the bulls. But if you look at your F&O ban and which stocks are placed there, there is a new inclusion in LIC Housing Finance, and this after a couple of downgrades. Yesterday we saw that stock down and about. So LIC Housing Finance as well as Manappuram Finance are the two stocks that have been added into your F&O ban list, whereas continuing there is Aditya Birla Capital, you have Birla Soft, you have Chambal Fertilizer as well as GNFC from the fertilizer pack, as well as India Cements and RBL Bank that continue to remain in this F&O ban list. in terms of where the money flows are coming, and it's quite interesting because we are seeing this kind of rotation happen from where FIIs are really putting in their money. Now there is a change that has happened towards IT stocks after the Q1 results that we're seeing, and also a drift away from financials, and we'll get discussing on why this is really happening. But in terms of yesterday's fund flows, we did see FII sell about 3,531 crore worth of equities, whereas the DIIs were the buyers of 3,357 crore worth of equities, according to the provisional data that is put out by NSE. In terms of the India VIX index, that one managed to drop about 7.98%, now somewhere hovering around that 18.74 levels, down from the 20 levels that it hit in those previous two sessions. So the VIX is something that you could see really cool off as we get into normalcy. But we are in this consolidation mode, rather we would say. So let's get discussing what should be the strategy you can adopt while this consolidation happens for the Nifty. And joining me for that is Rajesh Palviya. He is a Senior Vice President of Research Technical Derivatives at Axis Security. Good morning, Rajesh. Always a pleasure to have you with us. Well, we are just, minutes or rather seconds away from market open. But if you have to track the levels, what are those that you are looking at for the Nifty quickly?
That is important level for Nifty spot. If we able to take out those level, then some short covering action we can witness in the market. So 24,350 where we are focusing after the gap up opening. On the downside now we will wait for 24,100. If it breaks again 24 below 24,100, then we may initiate some short position also for intraday perspective. But I think after open 24,350 would be a resistance zone. So those who have bought at lower level can book some partial profit if it's a move towards 24,350 level. For Bank Nifty, 50,350, 50,400 are the key resistance area. So where one can keep eye after the opening.
Right. In fact, we are there at opening, and like you were pointing out, 24,350 is what you said, but we are somewhere around 24,250 levels is at least what we managed to open. A good gap up of 270 points, we could say, for the Nifty 50. The Sensex too seeing a good 800 point rally, we would put it at this point. So interesting to that taking those cues, just like what we saw on Wall Street, also snapping that 3-day losing streak, we would say. But whether that momentum manages to carry on till the second half of trade, that is what everyone is going to be likely looking at. But that resistance level is what Rajesh is right now currently putting it at 24,350 odd levels, so another 100 points from where we've opened up. But look at the other sectoral indices. You're seeing the Bank Nifty also quite positively up there by more than 450 points. So the Bank Nifty also gaining close to 1%, we would say, in opening trade. Your mid-cap index also close to 1.5%. That the mid-cap index too is seeing gains off at this point. So it will be, nice to see how even yesterday in the first half of trade, it was pretty much your broader indices that were, pulling the threads, we would say, even pushing the benchmarks higher, but not managing to sustain that momentum is what we are looking at, come throughout. But let's also pull up all the gainers and losers on your screen for you. Which are the stocks that are really adding to the benchmarks, performance at this point, that is adding to that close to 1%. You're seeing the Nifty IT index there, in fact, on your screens, almost close to 1.8% higher. So most of those components is pretty much that is lending that support, we could say, because the IT index, or the components of that, is the one that really even helps your bigger for the benchmark, or has a bigger portion of the benchmark. So the likes of an Infosys there on your screens, Coal India, ONGC also reacting to its numbers, as well as brokerages that have put out calls on it. You have M&M, JSW Steel, as well as Wipro again from the IT pack that is lending support. So interesting to see. You have your metal names as well as IT companies, a couple of auto names there like Hero MotoCorp as well as Maruti Suzuki also that are adding or giving support. And we could say that, the rate sensitives are acting up now. Tomorrow we do have the RBI policy decision that will come through, and we are we could hope for a surprise, or rather that status quo would be maintained as something, at least what the street is penciling in at this point. But let's also look at the flip side, because there is pressure that is building up. We were talking about how real estate and those stocks are likely to see a leg up in today's session after the government's decision. So to see who are the laggards at this point will be quite interesting, because there were a couple of stocks that will see earnings reactions to what is happening. So among your stocks that really will show that kind of fluctuation, most of them from the broader index, we could say at this point, that will see some pressure reacting to their results and otherwise. But Rajesh, let me come back to you and ask you what is the kind of especially F&O strategy that one would use given the levels that we've opened up at. Is this, and you think this momentum likely to sustain at least to the end of trade?
So, Stacy, I'll wait for 24,350 level. That's the important and trend deciding level on the higher side. Until we are not able to take out those level, I think short covering will not be triggered, because most of the call writers have added their position in previous day around 24,300, 24,400, even 24,200 strikes. So that needs to watch after this gap up opening whether they are covering their position or not. In initial trade, yes, some mild covering is there for 24,200, 250 strikes on a call writers front. So there is a possibility that we may try to penetrate this 24,350 range. If at all it happens, then yes, we may see some short covering action. So we are focusing on oil and gas sector. That sector is looking bullish at this juncture. I think most of the stocks are recovering from their recent low. So that sector can be looked at for near-term trading perspective. Even chemical space and pharma space, these three space can be looked at, and some of the stocks from FMCG. So I think these all stocks can be looked at for near-term trading perspective.
Right. Rajesh, what about your view on how the broader markets are behaving at this point? We are seeing a good leg up or a rebound, we would say, even for the mid-cap index, gaining close to 1.5% in today's trade itself, just in these opening few minutes. Do you think there is that still steam left, and there are stocks that look attractive within the mid-cap space and also the mid-cap index?
Yeah, definitely. So our market is not, showing any kind of weakness, but yes, because of some global cues, we are volatile in nature since last couple of days. I think once global volatility will settle down, I think our markets are ready to, show V-shaped kind of recovery in a very short period of time. Because still, if we look at the mid cap, small cap space, despite of this volatility, we are seeing that buying interest is there in cash segment at the lower level, and some of the quality mid cap and small cap stocks have holding the ground, and some buying interest is there. Even in the previous day, we have seen a very good rally in most of the textile stocks. So I think our markets, are ready to show recovery, but once the global sentiment settle down at certain level, I think we may see a good rally in mid cap, small cap. So I think one should use this decline as a buying opportunity in the market. Though still we are trading below the 20-day moving average, so that's why we are not getting any kind of comfort in terms of index. But I think once Nifty able to take out about 24,350, 24,500, I think again sentiment will improve, and then possibly we may see again good traction towards the buying side.
Right. Rajesh, do stay on with us. Let's get a couple of more stocks that will be a buzz. Now, we did have Lupin come out with its Q1 numbers, where the consolidated profit has surged to close to 77.2%, coming in at 801 crore rupees versus the 452 crore rupees. Revenues too have risen by about 16.3% at 5,600 crore rupees. EBITDA is up by 22.9% at 1,240 crore rupees, whereas the margins too are seeing a good uptick of 22.2% versus the 17.8% 8%. Now, it's interesting to see how pharma companies are really, playing this whole, whatever is playing out through the China plus one, really benefiting even the Indian market as well as the API players, and how it really works for them. In fact, you did have a slew of US FDA inspections take place for a couple of pharma names, but the results of a few has been mixed bag, we would say. And like I think Rajesh, you were also pointing out earlier that pharma is the space that one could look at, both chemicals and pharma. Do you see any specific names that you could give us, and what are the charts really looking at for them, and why they could be opportunities?
I think Stacy, Sun Pharma is looking very promising. The way stock is holding the ground at higher level, despite of this volatile market, stock is almost trading near to its all-time high trajectory. So I think Sun Pharma can be looked at the current juncture, where we are focusing to remain on the buy side of trade. Keep your stop loss around 1670, and on the high side, we are projecting target towards 1800 to 1840 in the continuation of this uptrend. Even some of the stocks like Alchem is also looking bullish. Lupin is also looking bullish for near term to short term perspective. For Lupin, if we analyze on the technical structure, as a stock now trading about to 1950 level, I think there is a possibility that stock will continue upward momentum towards 2020 to 2040 kind of level. So I think with the stop loss of 19501 can hold position in Lupin. Again, Alchem is also another stock where we are focusing. Almost stock is now negotiating with its previous swing high, and I think it's almost trading near to its all-time high trajectory. So the way stock is holding the ground at higher level, we believe that Alchem Lab, if it continues to hold above 5350 mark, I think there is a possibility that this stock can also exhibit good amount of rally towards 5600 to 5700 in a short period of time.
Right, interesting. Well, we also had a couple more results that came out, PB Fintech being one of those. Now, profits there come at around 60 crore versus the loss that it had reported on a YOY basis of 11.9 crore rupees. Revenues have surged by a good 52%, so coming in at 1010 crores. Adjusted EBITDA has jumped by 117% at 49 crore versus the 23, I beg your pardon, crores that it was reported earlier, whereas the margins too have expanded to 5% versus the 3%. And not just that, let's talk about power stocks, because that's quite interesting. We had the likes of Tata Power come out with its numbers as well, where the consolidated profits for the year, for this quarter is declined, but just marginally by 0.2% at 970 crore rupees versus the 972.5 crore rupees. Revenues though have increased by a good 13.7% at 17,293 crore rupees. EBITDA too is up by 21.9% at 3,586 crore rupees, whereas the margins have seen a slight uptick of 20.7% versus the 19.4%. Now, what it has also gone on to announce that it will be acquiring about 40% stake in the Kolurchu hydro power project, this for a good 830 crore rupees. Now, the company has also got the approval to terminate its delisting of the Global Depository Shares or GDS program that it was conducting, and this will take place in steps. The steps to delist this GDS will happen from the Luxembourg Stock Exchange, is where it's currently listed at, and that's what they're going to be looking at. Now, of course, there are a whole host of brokerages that have come out with their calls on Tata Power. CLSA has an underperformed call with a target price of 297 297 rupees per share for Tata Power. They see that the Q1 message, at least from has pretty much missed that estimate, with the worst for the Mundra IPP losses that have been on the back of weaker coal as well as the government advisories that have come. They did have that shift towards a renewable energy, independent power producers, but that could act as a key catalyst that investors could be looking forward to. But besides that, they continue to see declines in the PAT, and this due to the drop in the wind utilization rates as well as the stock which remains quite expensive at 35 times the calendar year 25 PE. So that is a concern, is what a CLSA is raising for Tata Power. Jefferies, on the other hand, also has an underperform call with a target of 325 rupees per share. They too see that the PAT has been below estimates due to the lower coal mine profitability, as well as the management's guidance of just about 2,000 crore of capex for FY25 is not something that has gone down well for Tata Power. Rajesh, maybe you want to come in on this particular stock, Tata Power. Is there a reason to be, worried, or is there because we do see power stocks have a good run during at least the summertime? Is there more reason to be looking at Tata Power in particular, or do you see the other public names within the power space that look more attractive?
So I think those who are looking for short to medium term perspective, I think Tata Power is looking attractive at this juncture. Though stock is still struggling to cross its previous swing high. Stock attempted to cross that level, but just because of market sell off, stock again shown some pullback action. But if we analyze the near term short term structure, the stock is still holding the ground above its short term moving averages. Stock is almost negotiating with its 20-day, 50-day moving average at the current juncture. So I think if its stocks continues to hold above 415, 420 kind of level for some couple of days, there is a high possibility that stock may again attempt to cross its previous multiple supply zone, which is placed at around 455, 460 zone. And if at all, if it manages to give breakout over 460 zone, then there could be a possible upward rally we can see towards 500 to 540 also on a short to medium term perspective. So overall long term structure is bullish. Stock is still holding above on its monthly support area. If we analyze on the monthly chart, stock is moving in upsloping channel. So I think one should use this decline as a buying opportunity with stop loss of 415 for Tata Power. 460 is first target. If it crosses, then next target is 480 to 500 for Tata Power. Another stock from the same space that we like is NTPC, is also looking attractive from the power space, and the way stock is almost trading near to its all-time high trajectory. We believe that once market stabilize, that NTPC may continue its outperformance, and then possible target for NTPC we could see towards 445 to 460. So NTPC is also buy from the power space with stop loss of 408.
Right. Let's get going and answer a couple of queries then that are coming in on our feed, and I'll request all of our viewers to keep sending us those queries so we can have Rajesh and the experts answer them. Right now there's one coming from Muthu Kumar, Rajesh, and he wants to know your view on Godrej Properties, and in fact I would ask you to extend that to a broader real estate sector specific, which stocks are looking interesting, and especially after yesterday's news of the government extending, rather putting in that amendment for that indexation clause on real estate. How does it really augur for real estate companies at this point, and particularly Godrej Properties? What are the charts suggesting?
So Godrej Property has shown some correction in last couple of days, and stock has shown some recovery also, but still it's struggling to cross its 50-day moving average, which is almost placed at around 3,000 kind of level, 3,100 kind of level. So that level needs to watch on the higher side until the stock not process those levels. Some consolidation we can see. On the downside, 2,900, 2,880 are the important support area in this decline. Above 3,000, 3,100, yes, some short covering action we can see in this stock, and possible rally can extend to 3,200 level also. So I think one can use this decline as a buying opportunity with stop loss of 2860 for Godrej Property, as long-term structure for Godrej Property is on the bullish side. Even if we analyze on the some other real estate stocks, I think most of the stocks are witnessing the same kind of behavior. I'm just able to look at the chart of DLF, Passive State. All these stocks are showing the same kind of behavior. So I think some follow-up buying action is still missing in all these stocks. Though there was some news flow from the amendment in the budget, I think once the market stabilizes, I think these stocks are poised to give breakout on the higher side. So our preferred choice would be DLF from the derivative space, and from cash segment, I think one can look to buy Prestige Estate. That stock is also corrected significantly, and I think again stock is available at very attractive level. So Prestige Estate can be looked at. And just a disclosure, we have already initiated buy on this Prestige Estate day before yesterday. So we have buy rating on the Prestige, and we believe that this stock can exhibit good amount of rally going forward.
Right, so Axis Security has a buy call on Prestige Estate from the cash market, whereas DLF looks interesting from the F&O space. But let me also tell our viewers about Suzlon. Now, there is that stock will perhaps be a buzz after it has said that it's going on to acquire about 76% stake in Renom Energy Services. Now, this acquisition is to take place in two tranches, and this will be by Sanjay Godawat Group that they are looking to buy the stake from. The first tranche will involve the acquisition of just about 51% stake for 400 crore rupees, whereas the second tranche will involve the acquisition of the remaining 25%, which will happen within the next 18 months. That will be at around 260 crore rupees. There are brokerages that have come out with their call. Morgan Stanley has an overweight call on Suzlon. The target price they are putting in is at 73.4 rupees per share. They say that after this Renom Energy acquisition, it seems like quite a strategic entry into the multi-brand OMS, and Renom in fact is a market leader with about 2.5 gigawatts of contracted capacity presence in the 7 windy states, which works and augurs well after this acquisition. The experience of maintaining these turbines for 14 different makes that implied valuation for it by about 4 times the price to sale, which is cheaper than its listed peers. So this acquisition definitely auguring well. You can see that stock also all propped up in trade, about 3% of odd gains that you're looking at for Suzlon. But Rajesh, let's get going and also answer a couple more queries that are coming in. There is Kartikeya Singh who wants to know your view on Technocraft Industries for a 1 to 2 year holding perspective. What are the charts suggesting? Is there a reason to be looking at this particular stock?
You're talking about Technocraft, right?
Yes.
So if I'm not wrong, stock is trading around 1600 level, right? And so, yeah. So looking at the structure for this stock, overall, it's in bullish trajectory. Stock has witnessed some profit taking at high level, but still, I think looking at the long-term structure, I think one should hold the position. And the way stock is holding the ground at weekly as well as on the monthly chart, we believe that once stock manages to cross above 1620, 1650 zone, I think there would be resumption of uptrend, and then possible target for Techno Electrica would be around 1750 to 1800 on the higher side.
Right. Interesting. There are two queries coming in from the railway space, and I'll ask Rajesh to get his view on both. Jyoti wants to know your view on RVNL, whereas there's another query coming in on KR Rail and whether it's a good time to be entering this one. Som wants to know your view on these two. So maybe you can go first with RVNL and then on KR Rail.
So RBNL is now consolidating, though there was some profit taking at high level, but still, if we analyze the long-term structure for RBNL, yes, it's in bullish trajectory, and the way stock is trading about to 520 level, I think there is a possibility, yes, we may again, attract buying action in this decline around those levels. So 530, 520 is the attractive level again, to buy and accumulate the stock. Those who have already bought at low level can hold on the position as long-term structure is bullish, and we believe that once stock manages to cross above 575, I think there would be again, resumption of rally would be there on the higher side, and 630, 640 would be the next target on the short-term perspective. But those who wants to hold it for long-term, I think they may remain invested in the stock as long-term structure for RBNL is on the bullish side, and possible target for the long-term we can see towards 700 plus kind of level also.
Right, let me get going with a couple more queries. Satvika Ranganathan wants to know your view on ICICI Bank, and I will, extend that to further the banking sector, because we are seeing there's an interesting report that suggested, there's a lot of churn that is happening, and FIIs were putting in more money towards IT at the start of July at least, and we saw that take away from the banking and financial space. Is that likely to continue after especially the earnings that we've seen also, where margins have not really been that supportive for banks at this point? Is that a reason of concern? And do you think there is still a value within the banking space, and what would be your picks? First, let's answer ICICI Bank.
So some corrective move is happening in ICICI Bank. The long-term structure is bullish, but yes, on the near term, some pressure is still there in the stock. Stock is now slipped below to 20-day, 50-day moving average. But those who wants to buy and accumulate for medium term to long term perspective, that they can use this decline as a buying opportunity in the ICICI Bank. Overall structure is bullish. I think if stocks manage to hold above 1140, 1150 zone, I think there is still possibility that we may witness some pullback action in near term perspective also in ICICI Bank. And on the higher side, 1220, 1230 is the immediate supply zone. Once the stock crosses those level, then there would be, again, we can see a all-time high trajectory for ICICI Bank. And positionally, we may see a target towards 1300 to 1340 on the higher side. So I think buy on dip should be your strategy for ICICI Bank. Even if we analyze some other stocks from the banking space, I think one can focus on some of the PSU bank. They have also corrected significantly in this fall. I think one can look to accumulate a Bank of Baroda at the current juncture. The way stock is now trading around its important support area of 230. I think that is important level for Bank of Baroda. Here one can deploy some, buying trades on a staggered manner with stop loss of 225. And I think once stock crosses about 255, I think there would be a possibility that stock can scale up to the next target of 280 to 290 also on a positional perspective. So I think ICICI Bank from the private bank and from PSU Bank of Baroda would be attractive bet at this juncture.
Interesting. Two picks there from the private space, ICICI and Bank of Baroda from the public sector. In fact, there's another query that's coming in on the banking space, and I'd rather take that. Srivardhan Gupta wants to know your view on RBL Bank and whether the entry at 228 across all time frames. What would you suggest? Does that make a good entry point for him? And how is what are the technicals really suggesting for RBL? If I remember correctly, it is been for the few derivative side. It has been on that F&O ban list for all of last week at least, if I remember correctly. But how would you suggest in the cash markets, and what would be a good entry point for RBL Bank?
So I think RBL Bank is still in downtrend. The way stock is, already, broken down its important support area on the near-term, short-term structure. Stock now trading below to its multiple support zone area on a weekly chart, which was at around 225. So break below 225 has, turned furthermore, bearishness on the structure. And we believe that, till stock not again, manages to regain about 225, there would be pressure for any kind of minor pullback action. On the downside, I think this stock can further fall towards 200 to 195 kind of level in the decline, because the structure is weak, a series of lower top, lower bottom formation on the daily chart. So I think there would be further more fall. Those who wants to buy can wait further. 200 to 200 and 195 would be the next level on the downside. I think if you want to buy in some small mid cap banks, so I think Federal Bank is looking promising from that space. I think that stock can be looked at to buy in this decline. Stock is now trading around 192. I think 192 to 185 is a accumulation zone for the stock with stop loss of 175. And I think in Federal Bank, still there is a possibility that once stock crosses over 198, 200 level, then this stock may exhibit good amount of rally towards 220 to 230 kind of level.
Well, quite interesting. I hope that answers Srivardhan Gupta's query as well on RBL Bank and the other picks that Rajesh mentioned in Federal Bank as well as the Central Bank. Both of them seeming quite interesting picks. Rajesh, quickly before we wrap up, you did mention a couple of themes that you find interesting in this kind of market from Pharma as well as the defensives, and how FMCG couple of stocks are reacting quite well in this kind of environment. Are there any selective stocks that are on your radar, and could you help with your recommendations for our viewers today?
Yeah, Stacy, so one more theme which I have quoted, that is oil and gas sector, and most of the stocks from oil and gas sectors are doing good in today's session. You can see, look at GAIL, ONGC, BPCL, all these stocks are showing buying interest. So I think ONGC can be looked at from oil and gas space. We believe the way stock has managed to view on a breakout on the long-term chart, I think till stock is holding about 305, there is a possibility that ONGC may exhibit good amount of rally on the high side, and possible target we could see towards 360 to 370. So this is positional trade from the oil and gas space in the ONGC. Even the GAIL is also promising. 222 would be the stop loss to buy GAIL for upside target of 245. From pharma space, as I mentioned, that Sun Pharma is promising. Another stock that we like from the pharma space, that is Syngene. That stock is also broken out the previous resistance zone, and I think the way stock is holding above 800 mark, I think Syngene can be looked at to buy for upside target of 860 to 880. Keep your stop loss around 805. And I think some of the stocks from consumption, that is Havells, is also looking promising. Stock is now, again showing buying interest from its important support area of 1760, and some pullback is already witnessed in the stock prices. I think here there is a possibility that Havells can continue furthermore upside. 1850 to 1860 would be the next target, with stop loss of 1770.
Right. Well, so quite interesting picks there. Havells is what you're looking at also, which is, quite interesting on the charts. But with that, we're completely out of time. So let me thank Rajesh Palviya from Axis Securities for giving us the time, answering our viewers' queries, and also giving us an understanding of where markets are really headed and those levels that one needs to be tracking in this kind of a volatile environment in the markets. But with that, it's a wrap on this edition of Opening Bell. Do send us your feedback in the comment section below, and don't be disheartened if we haven't answered your queries. We'll try and take them up with our experts as and when we do this all through the week. So don't be disheartened if it's not answered today. We will try and take it up sooner or later. But for now, it's a goodbye for me and the entire team that puts this together. But for all your other important business and finance as well as market related updates, come back right here to moneycontrol.com. I'll be back again tomorrow.